Welcome to the 91st episode of Kanga Crypto News, your weekly briefing for crisp, dependable updates from the crypto world. I'm Kuba, here to bring you the latest developments and the stories that matter the most. Before we start, a quick note. Everything you hear on Kanga Crypto News is researched and prepared by expert Kanga analysts using reliable sources only, but this is not an investment advice. We release new episodes every Friday. To stay on top of the most important moves in crypto, subscribe to the channel and tap the notification bell so you never miss an important update. And now, let's get into it. So let's start in Washington, because this is the most important crypto story of the week. On January 13th, US senators introduced a long-awaited crypto market structure bill aimed at defining who regulates what in digital assets. The proposal draws a clearer line between the SEC and the CFTC, potentially ending years of regulatory ambiguity. Under the draft, many tokens could qualify as digital commodities rather than securities once networks reach sufficient decentralization. That would place them under the CFTC instead of the SEC, reducing compliance uncertainty for exchanges, issuers, and ETF providers. The bill also opens the door to broader crypto ETF approvals beyond Bitcoin and Ethereum, setting clearer disclosure rules and registration pathways. In other words, it gives institutions a rulebook instead of a guesswork. Markets reacted quickly. Bitcoin went above 96,000, Ethereum traded over 3,300, and XRP climbed past $2.19. Why does this matter? Because regulation is the biggest bottleneck for institutional adoption. Clear rules unlock ETFs, unlock custody, lending, derivatives, and balance sheet exposure. If the bill advances, 2026 could mark the transition from regulatory chaos to regulated scale in US crypto markets. Now to flows and the underside of the coin. Bitcoin ETFs recorded nearly $486 million in outflows over the week. BlackRock's IBAT alone saw $129 million leave the fund, which sounds bearish at first glance, but context matters. ETF outflows often reflect portfolio rebalancing, profit-taking, or hedging rather than loss of conviction. Despite outflows, Bitcoin held its price levels. That suggests underlying demand outside ETFs remains strong, especially from derivatives desks and corporate holders. Because another sign of market maturity comes from derivatives. Institutional investors are now applying Bitcoin-style option strategies to Ethereum, Solana, and Ripple. That includes structured trades, volatility plays, and downside hedges. This is important because options liquidity usually arrives after spot markets mature. It signals deeper order books, better pricing, and more efficient risk management. In short, altcoins are being treated less like speculative tokens and more like financial instruments. Ripple continued to attract attention this week. Spot XRP ETFs have reportedly seen over $1.3 billion in inflows within 50 days, driven by institutional interest and improving regulatory clarity. At the same time, high-value XRP trades worth tens of millions of dollars executed within seconds signaled strong liquidity and whale participation. XRP's narrative is shifting from legal uncertainty to infrastructure and payment utility. This week also highlighted how fast capital rotates in crypto. Bitcoin ETFs saw outflows while altcoins derivatives activity increased. Prices didn't collapse, but they redistributed. This suggests investors are reallocating risk rather than exiting the market entirely. Crypto capital is becoming more tactical, not less committed. Traditional finance continued wiring itself into crypto markets. Large financial institutions expanded derivatives exposure, structured products, and compliance-ready trading frameworks. Rather than chasing headlines, they are building rails quietly. This slow, methodical integration is often invisible, but it's what sustains long-term adoption. Overall, this week was about structure. Regulation moved closer to clarity, institutions refined how they trade, and capital rotated instead of fleeing. Short-term, sentiment remains mixed. Long-term, direction remains clear. Crypto is becoming part of the regulated financial system, not an alternative to it. That's today's Kanga Crypto News. If you enjoyed this episode, like, share, and subscribe. Stay informed and stay ahead in the crypto world. See you next week.
We are Kanga, beyond crypto.